Hi, I'm John from Folla, and I'm happy today to be talking to my client, Avery Washington from Management Continental Ground. How you doing today, Avery?
I'm doing well, John. How are you?
I'm doing just fine. Thanks for making the time for this today. What we want to explore your offering, talk about your project and what you're trying to accomplish, just some general questions on that. As you know, this is not scripted, so we're just going to go off the cuff here and we'll ask you some questions and we'll share the information with potential investors and people interested in the project. How's that sound, Avery?
Sounds like a plan.
Let's start with the project itself. I understand there's like three phases. Can you describe what the project is and those phases in your own words?
The project has three sites in three submarkets of North Carolina, and each site, exits within a different phase of development. There's a 13-acre site that will be finished as ground up construction of 18 single family homes. There's a 28-acre site that will be sold as roughly 96 finished lots to a national builder. And there's a roughly 100-acre site that will be sold in three pieces as shovel-ready sites to various end buyers, likely a commercial developer, a multifamily developer, and a national builder.
That's excellent. And this is not your first rodeo, right? You've done a bunch of projects like this in the past. Can you just talk about your background in this type of stuff?
So I spent 12 years in the Marine Corps. In 2013, I started investing in fixed to rent or buy and hold properties. Fast forward to 2019, I got out of the Marine Corps. I jumped into real estate brokerage and investing headfirst. 2021, I started my first development project, one of which is exited in the last month and is going to finish exiting this month. I have two others under contract with national builders. Aside from that, I built a portfolio of roughly 6.5 million in value of buy and hold properties outside of the development that I've been involved in.
Yeah, it's pretty incredible. I've been impressed by what you've done since I've gotten to know you. And I also know you to be very passionate to try to educate people on real estate investing in general. And you're really passionate about getting most people that don't have a lot of money interested in investing in real estate projects like the one you've got here in order to build some wealth. Can you get into that a little bit? What drives that passion and what types of things do you do to include other people in these investments of yours?
Absolutely. The reason for being passionate about it is for a couple, there are a couple reasons actually. So, one, when I initially became interested in development, I looked everywhere for information to learn more about it. I watched every interview, every YouTube video from a conference. I didn't understand it at all. I happened to cross paths with a person involved in development willing to teach me about it. From that, I gained firsthand information that allowed me to develop the understanding to act on what I was learning. The reality is, especially in the internet age, everyone has something to sell. Anyone who knows something wants you to pay them for every single thought that they have. One, I think that's unreasonable. And two, I'm more interested in creating than getting paid to inform other people how to create. There are many people who, even when they know everything about development, will have zero interest in doing it. It it takes a lot of patience, and you shouldn't invest in anything you don't understand. I can't expect people to understand how development works if it took me a year to figure it out with the desire to do it. I have to be willing to educate people that are capable of understanding how it works and are interested in alternative investments to create passive income or contribute toward generating wealth that would like to invest in something like that. And I have to be willing to do it for free.
Yeah, I appreciate that. More like a learn by doing kind of thing, right? You mentioned alternative assets, and I'm a big fan of that. But how does real estate fit in a broader spectrum of investing when you look at public markets and alternatives? Can you just speak to that for a few minutes? Drill down on that a bit.
Certainly, on the broadest scale, real estate is considered a store of value, a safe bet. The value is expected to inflate over time, even if that is slower ebbs and flows of the economy. The type of real estate that I focus on is deep value add. With development, it's definitely the case because I'm creating or acquiring things below the cost of replacement. I'm recognizing that there are a specific number of inputs at a certain cost over time, and the combination of those things creates a value far higher than the aggregated direct cost. So that's what appeals to me about development as well. It's the process of creating value.
Yeah, and let's drill down on that because your business plan, which investors can see on your offering site, gets into a lot more detail. But the main thesis of your projects is to create affordable housing using a technique that you describe in the business plan around involving different stages of real estate development in a way that creates a cost structure that creates affordable housing. Can you just describe at a broad level what that is in the context of the projects? And again, people can read more details in your business plan, but can you just spend a few minutes on that?
I'll do my best to stay at a broad level. Specific to affordable housing, what I have commonly observed is that in the instances that we've come to recognize as affordable housing, where we see a grant or government subsidized construction offered to working class or low income families, when you look at the way the transaction is structured, the requirements to get this funding, the timelines, the oversight, it is actually more expensive per unit created. So, one, even though it helps a demographic in need of it, I actually think it's not sustainable. It's moving backward, in my opinion. The first, in my theory, the way to create affordable housing is to create a product of higher utility to a greater number of people at competitive prices to what is currently being offered on the market that's accessible to the greatest number of people possible. I think that's the way you create value in general. The other part of it is, unless you're doing something in such great volume, because it takes, say, 3 to 5 years once you're factoring in ground up construction, you're not going to make much money if your complete focus is on creating the most affordable product that you can, unless you have an insane amount of volume where you're benefiting from the economies of scale of negotiating better labor prices, better material prices, better prices on civil engineering, civil construction. And that's not the case yet for me. To offset that reality, what I've done is incorporate this site into this offering or project with two others. This also correlates to there being 3 phases in development. This site, where there'll be 18 homes developed, is exiting in the 3rd phase, ground up construction. I consider that phase to be the highest risk, lowest margin phase, but it is the highest volume, meaning the total amount of gross revenue when you sell each property. It is also the smallest site because it is the highest risk. The 28-acre site is exiting in the 2nd phase of development, which is build ready. And build ready meaning from the day it is sold, whoever bought it can start going vertical on it. All of the civil construction or horizontal site work has been completed. So in that project, I'm actually mitigating risks because I am closing on the land, going through everything needed to make it shovel ready. And then I'm partnering with a civil construction firm who will take on the additional risk and expense of creating finished lots to deliver to that national builder. And the third site is the largest site, and it's exiting in the first phase, which is called shovel ready. The day someone buys it, they can put a shovel in the ground and start civil construction. That's the largest, and it's not only mitigating risk by exiting in the first phase, but it's also mitigating risk by having 3 districts or 3 pods within it. One pod will be sold to a commercial developer. It has a corner with a 4-way traffic light intersection and 22,000 vehicles per day. And it's in direct proximity to a number of large local employers. There's a multifamily district that will go to a multifamily developer. And then there's a residential district that will likely sell to a national builder.
That's perfect. Again, there's more details in your business plan, but there's these 3 different projects in one overall project. And I think as your business plan, as you've schooled me on it, you're trying to take a different approach so that there is some product that's built in the end that is more affordable in general than housing that's built the more traditional ways. That's layman's way of summarizing what you said.
Yes, it is.
Well, I think that's great. And that's why I wanted to ask you a question about that. It's in the news right now. Lots of normal people can't afford to buy a house, right? So I think you're trying to take a different approach to it, and I applaud you for that. If investors are interested in that angle, they should take a pretty good look at what you got to offer there, summarizing. Let's talk about the geography where these projects are located. While investors can be anywhere in the country, we want to be clear on where this project is located and why it's located where it's at. Can you just briefly describe the location and why focus on that area?
Site 1, the 13-acre site, is in Leland, North Carolina. It's roughly 20 minutes from downtown Wilmington. It's in northeastern Brunswick County, one of the fastest growing counties in North Carolina. And the city of Wilmington, there's a lot of explosive growth going on in the area that's pricing people out of being able to afford homes within Wilmington city limits and New Hanover County, which is adjacent to Brunswick County. So I thought it was important to create a product in proximity to an area where there's a high demand to live or work or commute to. The jobs are honestly the pillars of society, absolutely necessary in every community, so that folks who are in those types of occupations could afford to live near where they work. The second site is in Roxborough, North Carolina, roughly 45 minutes to an hour north of Durham, North Carolina. It has a lot of growth on its horizon. Microsoft purchased a 1,300-acre mega site 10 minutes from where this property is that's going to be developed. That's going to obviously bring a lot of jobs in the future. There are a lot of vendors who would end up servicing whatever they do on that mega site as well. That would bring more jobs and more demand for housing. So this will help satisfy some of the growth coming to that area. And then in that project, we actually are working with a national builder who is primarily focused on creating housing that would be considered in a price point that goes toward working income, lower income families below $300,000. So that was actually really awesome to find somebody on the other end of the transaction that lends toward the goal that we have. And then the larger site is in Jacksonville, North Carolina. It is between 7 and 10 minutes to Camp Lejeune, which is the home of the Marine Corps Second Marine Expeditionary Force, which is about a third of the Marine Corps' operating force. A lot of demand in the area. Also, there's been a growing blue-collar sector or industry within Jacksonville, Onslow County as well. And the site lends toward convenience for access, for bringing more commercial development, hoping for a convenience store, if not a grocery-anchored shopping center, in addition to some more multifamily. There hasn't been any developed in the area in quite a few years. And then hopefully we can find a national builder that has a more affordable product to lay down in the residential district.
Yeah,
Also,
that's great.
it's got a great connection to the beach. It's about 30 to 35 minutes from multiple beaches, 3 beaches actually.
Excellent. I like that last part because we live near the beach. You also have MARSOC consolidated at Camp Lejeune, right? A different part of the Marine Corps. So all great growth areas. That's typical in other growing parts of the United States. So this model that you're doing in the growing state of North Carolina can be applied elsewhere as well, I'm assuming, right? Once this project's complete, is this something you want to repeat in other areas of the country?
Absolutely. I have a friend that I'm helping with developing a site in California. So there's already some dipping of my toe into the water in other states.
Well, that's quite a split you got to make between North Carolina and California, but you've always been a nimble guy. I think it's cool the way, I don't know anything about construction like you do, but having worked with you on this project, the fact that you're trying to create a different formula to produce affordable housing in those areas where it can be quite expensive, in the areas you mentioned in North Carolina, for example, is a noble act. So not only are you trying to create product that is more attractive to people that aren't gazillionaires, more blue collar kind of people, regular folks, which is the majority of us in income brackets. You also want to, getting back to your investment, include those folks in the investment itself, which is kind of cool. So can you explore a little bit about the tools that these folks can use when they think about investing in general, and maybe where regulation crowdfunding or Reg CF fits in that toolbox? Can you talk a bit about that?
I learned from you about how the Jobs Act was legislation that allowed non-accredited investors to start participating in what are considered private offerings or private investment opportunities. And so in learning that, it was really important to me to create something that allowed folks to participate in the ways that they now could. Right. And the other thing I've realized is sometimes we get fixated on thinking we have to have all this money set aside. There are actually other tools we can use. So the easy button is that we have some savings in our bank account that we've been wanting to invest or put to work. Or maybe we have some other goal of investing in real estate, but maybe it's going to take us longer to get started based on how fast we can save than we like. So in the meantime, you may have the opportunity to take that cash in the bank and participate in crowdfunding at a much lower cost out of pocket. And then you learn at someone else's expense and experience, and you generate a return on that money. Instead of paying for a course and hoping you have the aptitude to apply whatever's in the course and then do it, and hopefully you make money, which I'm not doubting you can just learn while you earn, right? Other ways are certain types of life insurance policies. I have one where I have an accumulating cash value that I can borrow from and apply to different investments to generate a return from my investment that allows me to pay that back and make some money in addition to that. Other things I've seen are self-directed retirement accounts. A lot of times people have a pension at whatever company they work for, and they don't realize they're not required to allow their company to manage their retirement funds. They can take control of their retirement accounts through what's called self-directed retirement accounts. They can allocate the funds to different opportunities suitable for getting them where they want to be for retirement. I've also seen people use health savings accounts. And lastly, when folks have a lot of equity in their home or lines of credit, I've seen them use that as well. Even though there's a cost to using that money, ideally, you're making an investment that has a significantly higher return, and you are making the difference between the cost of that money or the cost of capital and the return being generated from the investment you're making. So those are some of the tools that I've seen. A great way for you to make use of those tools is investing in alternative assets through crowdfunding.
That's a great explanation of those tools. Robert Kiyosaki talks a lot about that. There's a lot of different ways to think about how you utilize cash flow and certain types of debt, like you described with that spread, as long as you make it a little bit more. All good stuff. And unfortunately, in the public domain, in the school systems, a lot of folks aren't taught these techniques. I think it's a great thing you're doing to bring other people along. I'm going to ambush you with this one, but I've heard you on a different podcast when you talked about how you've made your first money when you were serving in the Marine Corps. I'm sure you weren't making a lot of money then, but that whole story where you invested in real estate and then sold it
Oh, yeah.
and had more money than you ever had before is a pretty cool story. And when you were serving in the Marines, because I'm an Army veteran, you weren't making a lot of money, but you did put what money you had to work. It's a fair representation of what you did a long time ago.
Very fair. I can tell that story if you like.
Please take a few minutes to tell that story, because what you're trying to do for others is bring them along by doing like you did. So I think it's worth sharing.
Not only that, but bring them along with way less risk than I took. It worked out, but it doesn't always work out. I started investing in 2013. My first house I bought was a duplex. I had been in MARSOC for about 2 years at this point, and I was planning on getting married. So I wanted to get a house. I knew nothing about investing. I just knew if I get a duplex, the neighbor's going to pay my mortgage. It's going to be great. I had no concept of value, return on investment. I just wanted my mortgage paid. Right? Fast forward, there's a snowstorm, actually, in late 2013 or early 2014. And I was staying at a friend's house during the snowstorm, because in North Carolina, if it snows a half inch, it basically shut down everywhere. So there's nothing to do. So I just stayed at my friend's house, and I thought I was a genius because I bought a duplex. And I was like, hey, you know what we need to do? We need to buy a multifamily property. So we literally stayed up all night looking for a property to buy. We came across 4 quadruplexes for sale. We made an offer on 2 of them. So we purchased those, him and I together. And then, because that worked out, of course, we are geniuses. So we decided we're going to double down and go further, and he's going to flip houses. He had way more cash on him than I did. To make up for that, I made him an authorized user on all of my credit cards. He bought materials, whatever he needed off the credit cards, and paid for labor out of his pocket. He also worked on the jobs as well. Fast forward to 2018, he wanted to sell the properties, but they're not worth quite as much as he expected. So he has to hold on to them for a little bit. And then he does a cash out refinance to pay me out for my investment. When he paid me out, I was in the middle of a deployment. I was literally 3 months in. I had 6 months left in the Marines. I was planning to get out. This is January 2019. He says, hey, we had a joint account. Says, hey, I just wired the money to pay you out in the joint account. I'm sitting in a third world country, and I opened my account to look at what's in there. It was more money than I had made the previous year. And I had not decided what I was going to do when I got out. And the first thought I had was, maybe I should focus on this. So literally in the next 30 days, I bought a rental property while I was still deployed. I got back in about 3 months, bought one the week I got back. And then I bought one about 3 months later, within a week or so of getting out of the Marines. And even then, I didn't quite have it figured out. If I don't get my act together, it'll take a long time for me to be homeless. I started educating myself through free resources like Bigger Pockets. And then I continued down the rabbit hole until I got into development.
I love that story. I never get tired of hearing it. And what you just tying that back to what we're talking about today, that was pretty risky, right? But But what you're trying to do now is people explore what you just described at a more measured pace, right? Where you don't have to have all the money to buy a duplex or buy rental property. You can invest as a piece of what you're trying to do. Is that a good way to describe what you're trying to do here?
One, people being able to learn. Two, people being able to get closer to hands-on faster. And three, people being able to generate a return on investment without having to take on all the risk. Failure can be a part of learning, but when your failure is you losing the $10,000 it took you 3-4 years to save, that can be the difference between you never trying something again or having a loss that it takes you another however many years to recover from before you can even start again, right? I think that it's important to be of benefit to others and allow them the opportunity to not have to take on all that risk before they have the information they need to be able to act on that information.
Yeah, great way to describe it. So, by the way, we've used an acronym a couple times. MARSOC is Marine Special Operations Command. That's the special operations portion of the Marine Corps. And you also said something earlier about Reg CF. I just want to clarify. The Jobs Act of 2012 did create this new round of non-accredited investors. The fact is,
Mhm.
non-accredited investors legally could invest in a couple of other types of exemptions, like one of the Reg D versions and Reg A. But while technically they could, not to the extent that the Jobs Act created Reg CF for, which is what we're using now. I just wanted to clarify that. But getting back to the
Mhm.
offering, we have something called a side-by-side offering right now. Could you just describe what that is? I'll set it up for you. We've got a Reg D offering, which is just for accredited investors. And by the way, have a definition that the SEC updates once in a while. Basically, it's someone with $1 million in net worth, not including the equity in their own home, or they make more than $200,000 a year or $300,000 if they file jointly with a partner. That's what we mean by accredited investor. So you got a Reg D offering up to $5 million targeted for that. But we also have a Reg CF offering targeting about $1.2 million for that. And that's called a side-by-side offering. Can you describe for viewers and listeners why you're taking that approach?
Certainly. The reason I'm taking the approach is because I wanted to make sure that different demographics could have the opportunity to participate in the development of these sites and to learn the process of how it works in general. And also just to be a part of something that many people would like to contribute towards or care about, but there isn't necessarily an avenue for them to do. We hear about affordable housing all the time in the news from local governments, but outside of them offering money, it's not unreasonable for me to expect the everyday person to just find a way to create housing affordably for someone else. It's not in most people's wheelhouse. That's the reality of it. So this is a way they can be better educated about some of the nuance of it and also help be a part of a solution to a problem that honestly has been accelerating over the last 5 years at this point.
Yeah, that's great. And I applaud you for doing that. Trying to kill two birds with one stone, invite others in, dip their toe in the water on real estate investing in general, as you described, but also on a path towards a solution to this affordable housing issue. And I commend you for doing that and taking the lead on that. Avery, that's all I have. Is there anything else you want to add that we might have not mentioned that you want listeners or viewers to know about the project or yourself?
I think in general, it's important to be focused on creating value over extracting it. And I think the best way to do that is to be of the highest utility to the greatest number of people. That is my goal overall. In the way that I'm conducting these projects and the way that I'm structuring, raising capital for them, and in the products being created as I develop each of these sites.
Well, thank you for that. Just to summarize, Folla Capital is an SEC registered broker dealer, helping Avery raise this capital as a broker dealer and intermediary for the capital raise. And we welcome you to come to our website at follacapital.com, Folla capital.com, and explore more details of the project and ask questions if you want to of Avery on the site, and just educate yourself and decide whether it's something you want to participate in or not. Thanks so much for your time today, Avery. We appreciate it. Good luck in the future.
Have an awesome year.
Thanks, Avery.